very warm good afternoon, ladies and gentlemen. It's an absolute honor to have the kind presence of our eminent panelists and the lovely audience. Albert Hubbard once said, one machine can do the work of 50 ordinary men, but no machine can do the work of one extraordinary man. With these words in mind, I, Jasdeep Singh, on behalf of India Factoring, welcome you all to this amazing chat show, Factoring, a one stop solution for your global aspirations. On this show, we invite top dignitaries from the corporate world to have insightful discussions with them on various topics like factoring, technology, economics, etc. Before introducing you all to the eminent panel, let me tell you all a bit about India Factoring. India Factoring offers working capital solutions through the factoring product aimed at converting your receivables into cash. The company is a subsidiary of a European bank, FimBank plc Malta, and is registered with the RBI as an NBFC factor. India Factoring is also AD3 categorized authorized dealer. Through our global network, we offer one-stop shop solutions around receivables finance. Recently, India Factoring was also awarded as the International Factoring Provider of the Year and was also the recipient of Best Deal of the Year 2022 award and is the market leader in export factoring. Now, without further ado, let me introduce you all to the eminent panel. First, we have Mr. Vaibhav Joshi, a proven strategist, planner, and able business leader with strong experience in creating and implementing predictable revenue and sustainable business models. Mr. Vaibhav Joshi is CEO and co founder for EasyPay. In this current role, Mr. Joshi is building a neobank focused on MSMEs. He believes that while MSMEs contribute to the growth and GDP of the country, they are undeserved in banking and lending. His aim is to cater to 70 million MSMEs and their 110 million employees by the way of a one stop shop, embedded finance led neobank. We welcome you, sir. Then we have Mr. Ravi Valecha, experienced banking and financial services professional with experience in factoring and supply chain finance. And he's the current CEO of India Factoring. We welcome you, Ravi, sir.
Yeah, hi, thanks, Jesse.
Now, let me set this discussion in motion by introducing today's topics. Today, we'll be having discussions on the current economic scenario in the country, some insights about neobanking and fintech industry, and last but not the least, about factoring. I would now like to request Vaibhav sir to take the helm of the show and begin with discussion on the topic. Artificial intelligence and machine learning are expanding in importance, scope, and its applications in financial technology sector. So, sir, what is the role of artificial intelligence for a seamless and advanced operation for neobanks and fintechs?
Thanks, Jasdeep. Hi, Ravi. A very good morning to all of you. So, artificial intelligence and machine learning are actually two very critical technologies that have come in the BFSI space. But before we talk about artificial intelligence and machine learning, let's talk about, let's take a step back. And what I generally like to do when I'm discussing on this critical topics is explain how things were working earlier and how these new technologies have actually made a difference to enable for the betterment. So if you look at banking as a industry, then banking as an industry functions primarily on two things. So one is deposits and second is lending, essentially, which means that you walk into a bank, make a deposit into your bank account, or you take a loan from a bank. These are the two primary products around which banking was built. And then eventually we got payments, eventually we got trade, we got forex, we got capital markets, so on and so forth. But if we talk about these two core products on which the banking stack actually revolves around, traditionally banking has been a branch-based activity. Okay, so which is a brick and mortar setup. You would, to open a bank account, you would normally walk into a bank branch, you would, fill out the forms, and then your bank account would get opened. Earlier, that used to be, maybe 25 years back, there used to be this red ledgers where the bank account would get opened, and those ledgers were distributed, which meant that if you are opening your bank account in a particular branch of a bank, then your account would be limited towards operations within that branch. Okay, so you could not operate your bank account from another branch. So I can see the look on Jasdeep. So probably this is pre Jasdeep Singh era, but that's how it used to be. Uh, if you open your bank account in a certain branch in Bandra, Mumbai, for example, and you wanted to operate it out of Borivali, you would not be able to do that because your ledger would be limited to that particular branch. So that's when came in, total branch automation or TB, and then followed by CBS, core banking systems, and then, followed by NFS, National Financial Institution, so on and so forth, and automation came in. Now, even if we talk about, the basics of account opening, then there is a form that comes in. You have to fill that form. Okay, there are the square blocks, and you put in your name in those square blocks. So first name VAIBHAV, it would get into each of the block. Last name JOSHI, it has to go, because then that form actually gets scanned by OCR technology, which is optical character recognition, and then those characters are picked up and then transferred into machine readable format. Okay, so that was the beginning of the AI thing, because earlier when a form used to be filled, Jasdeep, am I audible? Can you see me, hear me?
Yes, sir. Perfectly audible.
Very
Okay,
much, very
perfect.
much.
There was a slight lag at my end, so I just thought I'll check it out. So this form actually, in earlier times, people would have to key the details into a PC, and then eventually, with the advent of OCR, what happened is you could scan the form, which was again a handwritten form, but you could scan it and then convert it into machine readable format. And today, what happens is, AI bots, they have become so smart that you can actually open a bank account in under 2 minutes from the comfort of your home without needing to go to a bank branch, because a lot of your data is already available. The critical aspects such as KYC, know your customer, is done digitally. Okay, and India Stack has played a fantastic role in that, by the way. So India Stack is one stack which has taken India to the top of where we are in the BFSI tech space today. And not just that, I mean, this example was account opening, but if you look at more complex use cases, and this is where, more related to the show, factoring, because if you talk about MSMEs, micro small medium enterprises, the sector that we cater to at EasyPay, what happens is these are the guys who generally are neglected by banks, financial institutions, because they are small guys. Okay, but now imagine artificial intelligence coming in and a fintech like EasyPay using that to analyze the cash flow of that particular the micro enterprise, and basis that cash flow, what we do is we generate his payables and receivables statement. We create using a credit AI. We create a financial profiling based scorecard for that micro enterprise, and basis that, then we partner with NBFCs at the back end to give him a loan which is completely unsecured. Okay, this is what I'm sure Ravi is also doing, and he enables that by underwriting it. Now, what happens is, Jasdeep, this would never have been possible in the pre-AI era. Okay, now look at this. We have 70 million MSMEs in India, micro, small, medium enterprises today. And if those 70 million MSMEs were to walk across those millions of bank branches and avail for loans, I can tell you right now, on unsecured loan part, 99% of those would get rejected. Okay. With the use of AI and with the use of ML, these 99% of the MSMEs who are going to get rejected can now avail lending at a far more cheaper rate than compared to what the loan sharks that they go for today, okay, in the unregulated market. And that is because of AI and ML, because the artificial intelligence actually sits into the app, it understands various data points, it picks up those data points, it helps us create that profile. If there is some data point which is missing, then it will prompt certain questions which would actually help recover those data points. And then there is ML, which actually keeps on understanding what is happening, and then creates a pattern, and then that pattern actually becomes it's more like a command kind of a thing. Okay, so that's how it works. Now let's look at various aspects of fintech. So I think AI plays a fantastic role when it comes to acquisitions. AI plays a fantastic role when it comes to engagement. AI plays a very, very important role when it comes to rewards, and to make sure that the customer actually is coming back to your app and using it or not. Now, let me spend 2 more minutes on this. I don't know how much time I have on this question, but typically, if you are doing acquisitions, okay, now most of the acquisitions today are done digitally, and I'm sure Ravi will agree with me. Okay, the feet on the street model exists, but it's a very expensive model at the end of the day. We would all rather have our customer come to us digitally. So social media is one of the areas that we generally use from a digital acquisition perspective. Okay, so the role of AI is extremely critical over there, because it helps me understand. Okay, when I'm doing a social media campaign on a Google or a Facebook or a Insta or something, AI helps me understand the pattern of the user. Okay, and thereby, from an acquisition perspective, the campaigns can be tweaked to make sure that more such users I'm able to reach out. Okay, then what happens is AI also helps us understand what kind of campaigns actually work, what kind of campaigns don't work. Okay, it's like, so in very simple terms, just it's like keeping sensors across various layers. So every time a user actually crosses a layer, the sensor gets triggered, the user has reached here, reached here. And when at a particular layer, the user does not cross, that X percentage of users are not crossing this layer. So then that's kind of a trigger point for you. Over to you, Jasdeep.
Thank you very much for the insight, sir. And you really explained very well how like AI is really bringing about a change in the financial industry and also in the neobank space. Sir, my next question is directed towards Ravi, sir. So, sir, India recently overtook UK as the fifth largest economy of the world, and a decade back we were at 11th spot. So, sir, what steps do you think that the government should take to carry on this tremendous growth? And also, what role does factoring play in this growth?
Thanks, Jasdeep. High web of interesting points from AI and ML point of view, definitely. Obviously, there are many things. Obviously, it's a big achievement for India that the country which ruled us, at one point of time, we overtook them at the global level in the economic perspective, and definitely there will be more things, and aspirations are there to be at the number 3 level also. And definitely all these important aspects, which is from the financial services aspects, which is including the AI, ML, the digital, the movement, is taking us there in that shape. The financial services has a huge contribution. Obviously, financial services is a key enabler for all these aspects: the manufacturing, the services, the trade, everybody, right from the bottom level of the pyramid to the highest level. Finance is which keeps them flowing, right? So that's how it has taken shape. And digital, what we saw from demonetization point of view, 2016 really kicked off. Maybe the real impact may not have been the underlying cash currency, but it propelled India towards moving to the digital world. We saw the movement towards UPI, the movement towards all what we have seen today. So that's taking us forward to the digital world and enabling the ways and means of easy access of finance, unsecured, and new ways of finance, I would say. Putting that together, factoring is also a new age. I would not say new age, that it is it has been there in India since a long time now. However, it has started taking shape now itself in past maybe 5-7 years only, when the regulation actually around it came about, and thereafter it has taken shape now. And obviously we saw in 2017-18 onwards, obviously there was issues in the banking and financial services world, where there were again a huge impact of NPAs and the traditional banks, NBFCs, using the traditional mode of finance. And that has been the legacy, and that has been the something which has been bogging India down for a very long time. So movement towards the new age, be it the digital world, be it the new age products, be it the easy way, easy banking and the neo banking setup, then moving away from the traditional means is something which will take India to the new age, and take us to the position number three. And there, where that positioning will help even from a factoring point of view as well, because that is what is factoring, is essentially providing finance against the unsecured, in an unsecured manner, to the customers in India, and using the underlying strength of the receivables, which has not been traditionally used, using the new ways of assignment under the factoring approach, the supply chain finance approach, and we have seen what it could do. The numbers, as we have seen, India contributes, the factoring in India possibly is less than 0.3% of the overall GDP, what we are seeing. However, in the developed economies, this proportion is way higher. So obviously, the customers in the developed economies are relying on the unsecured means of finance, rather than being bogged down by the collaterals, rather than being bogged down by the historical ways of functioning. And that's where it is factoring is a key enabler, and you are seeing more and more entrants in the market today. More and more digital means of providing the exchanges are there, and towards that, even on the export side, you would see new initiatives coming in. And definitely India factoring is somehow being the pioneer in that space, is working towards enabling finance as much as possible in an unsecured manner to the bottom of the pyramid also. I hope that helps. Thanks.
Thank you. Thank you for answering, Ravi sir. And my next question is directed to Vaibhav sir. So, sir, the fintech industry has grown exponentially, and the wave of changes brought in by the fintech has profoundly impacted financial inclusion and penetration in the country. It has also been beneficial since a country like India caters to a large population, so it requires advanced technology. So, sir, FinTech 2.0 is being set to come in the year 2023. Do you think that India is ready to unlock the next level?
So I think when people say FinTech 2.0 is coming in 2023, I think FinTech 2.0 is already here when we talk about India. Okay, globally, probably yes, FinTech 2.0 is happening now as we speak. But look at India. If you talk about the length and breadth of the country and the population of the country, then we have few states in the country which are larger than a few countries, few of the developed economies. So, and where I'm coming from, Jasdeep, is the consumption capacity of the country. Okay, as a country, India has tremendous consumption capacity, and we all know that any economy that is driven by a consumption economy is an economy that's going to thrive. For fintech, it becomes extremely critical, because what happens is for the country the size of India, the type of innovations that are getting carried out in the BFSI space. Okay, now banks being heavily regulated, heavily compliance driven, are not agile to reach out to the last mile in the fastest possible manner, and that is where fintech plays the role of an enabler. And it is not just from an acquisition perspective, but also from a servicing, also from a it's a partnership. It's a win-win for both the bank as well as the fintech, because essentially what happens is banks play the role of a back end, who create the product, who take care of the regulatory compliances, and not just banks, even NBFCs. And fintechs are the entities who are nimble-footed, so they actually are very light on distribution, riding completely on digital, and they take the product out to the last mile in the simplest possible manner. The key is keeping it extremely simple. So the regulations, sorry, one second. Sorry. So the regulations is something that banks and NBFCs do take care of. Fintechs also fall within the purview, and our regulator is extremely hand in glove with the industry, walking with the industry, sprinting with the industry when the need be. So you will see in India there are a lot of regulations, guidelines that are coming in month on month when it comes to fintechs, when it comes to engagement between banks and fintechs, and so on and so forth. And the reason behind that is because of the depth of the financial inclusion that we as a country want to look at. That is essentially why that's happening. So let's look at this, Jasdeep. The point being that today, if a bank had to carry out financial inclusion of MSMEs, and they wanted to carry out unsecured lending, okay, or an NBFC wanted to do that, it would have been extremely. They would do it in a certain manner. Essentially, they would want to rely on the brick and mortar setup, fit on the street setup, okay. But if you look at a fintech and they want to do it, then what they would use a completely different approach. Okay, the way let me give you an example of how EasyPay did it when we wanted to penetrate into the Bharat ecosystem, the Bharat part of India. And while we are at it, let me also tell you that we are talking about fintech 2.0 happening. I know everyone knows UPI is one of the best payment products that is there in the market, the most favorite payment product, which we are also now exporting as a country. 80% of UPI transactions actually happen from tier 2 and below. That's financial inclusion for you. Okay, that's financial inclusion for you. Look at the penetration of financial inclusion. If I talk about MSMEs as a segment that we actually cater to, then 90% of MSME owners actually have a smartphone. They know how to use WhatsApp. They know how to use YouTube. Okay, so what is to say that financial inclusion has not reached them? 99.99% of these guys actually have a savings account. Unfortunately, they don't have a current account because they are the segment that are neglected by the banks. Okay, and that is where we come in. That hey, EasyPay as an app, one-stop shop, becomes a embedded finance neo-banking platform. So you come on the app, you open a current account digitally, 5 to 7 minutes, it becomes active, which unlike earlier used to take 3 to 4 days. And immediately you get a credit limit assigned to you. So it's like a business loan that gets approved, bases your cash flow data, and then from there on, you are on. So your payables receivables management happens through EasyPay. You get loans at a much cheaper rate compared to what you would be getting in the market. Now, if a bank or an NBFC was going to do it, it would have been extremely time consuming effort. And now coming back to the example I was trying to give you, Jasdeep. So during COVID, in the first wave, when we were looking at increasing the number of users, what we said is that we will do a small campaign. So we did a TV ad, and the response, it was the message was extremely simple. The campaign was Bank Wali Dukan, which meant you can walk into a dukan, which is a EasyPay outlet, and carry out your banking operations. That's it, as simple as that. Nothing more, nothing less to it. Bank Wali Dukan campaign. The campaign became so successful that our dialer started getting, I think, 50,000 missed calls a second or a minute, and we could not just cater to it. And then I think we did some close to 2.5 million merchants got onboarded on our platform during that time. Okay, during that campaign. So I don't think digitally combining something which is a marketing campaign, something which is technology, something which is product, then a layer of AI and ML to understand who is the right fit, then integration with digital stack, then integration with servicing, which includes contact center plus bot based servicing, and then catering to having a credit AI, having a neo banking stack. So all those things, I think for a regulated institution to do it, it's just slightly far fetched. I'm not saying it's not possible. Slightly far fetched, because then what happens is they lose the nimble footedness over there, and that is where fintechs actually come into play. Again, 2 more minutes on this. Look at the penetration of UPI in the country, and it has been phenomenal. Look at the penetration of AEPS in the country. It has been phenomenal. I remember a project I was doing in 2017, 2018 when I was with Yes Bank. So we were converting all the fair price shops in Maharashtra to become a BC agent of the bank. So essentially, you could just walk into a fair price shop, give your Aadhaar number or mobile number, put in your biometric, pay for the ration automatically because the subsidy actually fell into your bank account, or you could even make a withdrawal from your bank account. And the type of penetration that has happened today, I think there are a few million agents across merchants across India who are enabled on these services. So any kind of payments you want to do, everything is digital in India. Now the next step of the real fintech 2.0 that's happening in India is embedded finance and neo banking. So these are the two next steps, because payments, we are there, we are right there at the top. Globally, we are right there at the top. So we have embedded finance where we're talking about digital lending, secured, unsecured, supply chain, ecosystem driven, so on and so forth. We are talking about neo banking. So we have seen 4 successful neo banks in the country on the consumer side. We talk about Jupiter, we talk about NeoX, we talk about Epify, we talk about FreeOSave. And now we are trying to build a neobank on the neobanking platform rather on the current account side. That is what EasyPay is doing. And then you have InsurTech, then you have wealth tech, then you have regulatory tech. So these are the upcoming areas of FinTech 2.0, which is what I would like to put it.
Thank you for sharing, Vaibhav, sir. And my next question is directed to Ravi, sir. So, the Chief Economic Advisor to the government, V. Anantha Nageswaran, said that India is in a stable situation and the growth momentum is good, despite the multiple crises which are going around the world and they're getting entangled with each other. So, what are your views on this?
No, definitely. The numbers which are coming out are very, very strong numbers, which is very true. And obviously, the government agency, the top man in the government sitting so that we are in a strong position brings a lot of comfort to the people around, and like me also, and I'm sure Vaibhav and others also, industry leaders who are at the helm of the affairs, obviously. And these are not just in the air numbers, these are actually ground data which is there, supported by the facts. You would have seen reading the newspapers and what are the numbers coming out for the Diwali itself. The numbers are very, very positive consumption story led numbers, which is showing the demand is there in India. The requirements are there. The consumption story is still going to be there. However, yes, there are inflationary trends. We do recognize that there are inflationary trends. There are the credit rates are increasing, and as we speak, possibly another round can be expected in December or maybe later November also. But these are all small, part of the story. The current world situation which is going through obviously will have some impact on the India also, right? Today we are not an isolated economy. Now we are talking about leading through the exports mechanism also. So obviously, what you export, if there is no demand, right? So, or if there is a less demand or depleting demand, so obviously that will add to some bit of pressures. Having said so, there are industries which possibly we have a very insignificant presence. We may be possibly number 3, number 4 in most of the export situations. So that's the demand may be going down overall numbers from the procurement side, from the buyer side. However, the if they were procuring possibly 10 billion across the world dollars, possibly they may reduce it to 7 billion, 8 billion. And out of that 10 billion, when they were importing earlier, the demand procurement from India possibly was say 2 billion. So from 2 to 7 is also a story, right? So that is what India is trying to do, is that we know our competitors, we know the other countries who are also exporting are going through their own challenges, and possibly there might be an opportunity to step in that space. And that's what India is trying to do. And so that's why I believe that the growth story in India is continuing story, be it domestic story, even most stronger as of today, and it is going to be the strongest story for as long as there is a lot of infrastructure development happening, a lot of jobs getting generated, a lot of opportunities getting generated. That's going to be there. However, the global front also, the India could be stepping into the larger area, and I don't see the numbers which were quoted, the growth aspirations which were quoted from $650 billion exports, what we have done in March 22, FY March 22, and the projected numbers were for March 2023 were around about $800 billion. Even though it may not be 800 billion, it's not going to be $650 billion. It may be around about 750 or between 750 to 800. Could be possibly that we could even overshoot that $800 billion if all things fall in place. Exporters are able to exploit that opportunity. Now, around that, also there are a lot of ecosystem being created, to facilitate. We saw earlier this year a lot of reforms being carried out, a lot of incentives we provided through PLI schemes for the exporters to build the infrastructure, investments into the new space, new requirements, new supply mechanisms. Also, we have also seen the flows coming in, the effect of earlier trade wars. Now the impact is actually being seen on the ground as well. So from that perspective, the economic numbers, I think, definitely are positive, and indicates a growing positivity around the globe for India as we speak. The PMI indexes, both on manufacturing as well as on services, which is basically the purchase managers indicators, are also on the positive fronts, ranging around 52 to 55, 52 possibly at the lowest end when it had happened earlier, but it is now ranging around about 55 or so, both on manufacturing as well as services. So I don't see that, and that is a number which is actually used by the manufacturers. So that means that the manufacturing and the services input is going on, right? So they are procuring for the manufacturer, they're procuring for the services, they're procuring for the input cost, and that will lead to the output, obviously. And we are seeing that story continuing even in the domestic space as well. There are huge number of orders already piling up. Just the latest numbers which we saw on the cars, also possibly car manufacturers are sitting around 800,000 vehicle or delivery bookings are there already, and that is expected to be delivered over possibly next 1 year and growing. It's not that it is a stagnant number, it is also possibly growing number also. Yes, there will be short-term pains in consumers, in possibly inflationary trends, what you and I are possibly seeing at the CPI front, but that's part of any story. What goes down and what goes up must come down, and vice versa. So it will continue to be a short-term phenomenon, but over a mid-term period, definitely there is a long-term growth story I see.
Thank you for sharing, Ravi sir. Sir, adding on to this, the risk of global recession is rising worldwide, projected to happen in the year 2023. And not just RBI, but central banks around the world are simultaneously hacking interest rates. So what role does Indian exports play in combating this threat?
Now, obviously, as I told you, that the interest rates across the world are rising. In India also is not an anomaly. We are also seeing that interest rates. And interest rate is not to circumvent anything. Interest rates normally are used as a tool to match the demand and supply gap earlier. More demand, that means you need to curtail that demand, right? Because of which inflation. However, this is not a demand and supply demand issue at this point of time. This is more of a supply issue, what we are seeing, and that's why you are seeing the rates increasing across the globe. In India also it is going to be there, but definitely, as I said, it's a very short-term phenomena. It possibly will give some jitters in 23 as well, but definitely after that it should bode well for all the stakeholders in India once people tide through this. And as I said, these short-term pains on the credit rate hikes and all those things can definitely be mitigated through the increased volumes, what we are observing now, the increased numbers, what we are seeing. So as the economy size grows, these numbers obviously will fall short. I hope I addressed those.
Thank you, sir.
Thanks.
My next question is to Vaibhav sir. So, sir, as discussed about carrying forward the discussion about neobanks, Niti Aayog recently said that India has a technology stack to facilitate digital banking, and there is a need for creating a regulatory framework now for promoting this. So, what do you think that the regulatory framework should be like, and how it would weigh in on the digital banking market?
Wow, very interesting question. So
Yes.
this is something that is a mystery when it comes to India. Regulatory framework around neo banking. If India was to have a regulatory framework around neo banking, then we could look at some of the countries which have already implemented it, where we could go ahead and provide a neo banking license. Okay. But at the same time, if we'll have a look at the licensing regime that's already there as per the regulations, so we have, I think, 5 category of banks. We have PSU banks, we have private banks, we have small finance banks, we have payment banks, and then I think we have cooperative banks, right? We have already this 5 category of banks which are already there. The first four are governed by, of course, all come under RBI, but the last ones go under the State Act. Now, having said that, what is stopping existing licensed bank to become a neo bank? The answer is nothing. So, if you ask me from a different perspective, the regulation exists today. Okay, the regulation exists today, except for the fact that a fintech like EasyPay may not be calling itself a neobank, cannot call itself a neobank. Okay, because there is no entity such as neobank in India today, but it is a fintech which partners with a regulated bank to distribute the products, or on the technology end. At a broader level, I think this is a question that the regulator, government, Niti Aayog, they have to solve. Uh, from an industry perspective, I think the only thing that we put in is that whether a neo banking license was to be accorded or whether it was not to be accorded, I think fintechs will continue to work with banks. Fintechs will continue to coexist with bank, and it's a collaboration at the end of the day, where the distribution happens in a much agile manner, because I think the inherent need, the inherent problem that we are all as an industry trying to solve is serving or servicing the unbanked and the underbanked. Okay, so financial inclusion is the inherent need, and that's how it is now. Whether you do it through a license, whether you do it without a license is just a question of if you ask me, there are two main things when it comes to license. A, uh, a few bips here and there when it comes to the bottom line, and B, the question about ownership of the customer from a pure regulatory perspective. These are the two aspects that generally come into play when a licensing comes in. But having said that, I think the entire industry is, while we may be looking up to the fact whether or not the government is going to come out with neo banking licenses, but other than that, I think we are all happy with the fact the way RBI has come out with guidelines for engagement between banks and fintechs, and based on that, I think the business is booming for all of us, for all the fintechs. So the enabling levers, the point being, the enabling levers for fintechs as well as for banks are already in place, and those are being strengthened by the regulator. Okay. Uh, uh, Generally, what happens is a thought that comes at the Niti Aayog level. For that thought to translate into an actual reality, there is a lag sometime. So anybody can only comment on it once the thought actually gets cemented, and then from there it comes to a reality.
Yes, thank you for sharing, Vaibhav, sir. Sir, adding on, RBI recently rolled out the first pilot in the digital rupee, or we are calling it e-rupee, in the wholesale segment for government securities. It launched it on November 1st. Sir, what do you think is the ideology behind this, and what does RBI aim to achieve through this?
So digital rupee, I think CBDC, in fact, is the need of the hour. Okay, we have been to do it for a while now, especially in India, because we are a country which is not regulating crypto. So we need a digital currency of our country, which does not rely directly on the actual physical currency, and we are able to transact digitally. Okay, the world is moving towards digital. Till what time are we going to keep on printing currency notes and keep on having dependency on physical currency. There is a lot of costs that are involved in that entire logistic exercise. That's one part of it. But other than that, a lot of businesses, a lot of transactions are actually moving digital. Why do you think fundamentally products like IMPS, NEFT, RTGS, and now more recently UPI have picked up? Why do you think products like APS, APBS have picked up? These products have picked up because there is a need for an inherent digital transaction. Okay, now there is a limit on what kind of a physical transaction you can do. So if the need for a physical transaction, if the need for physical currency is coming down, then why would you want to rely on that physical currency to carry out digital transactions? That is where that inherent need for a CBDC or a central bank digital currency, and that is where the pilot for digital rupee. Okay, now look at this. A digital rupee is a rupee which may not be equivalent to your physical rupee. Okay, once the pilot is done, what how we take shape is to be decided. If you look at US, then it is equivalent. If you look at, I think, one or two countries that I know of, it is not. But I think we would probably follow that path. So 1 rupee is equal to 1 rupee. Okay, and then you have that digital rupee in a digital form. So in your bank account, you may have X amount of rupees, and those X amount of rupees would be digital, physical. And then when you carry out a transaction, so let's break down a transaction, and let's for your benefit, let me break down a transaction which is the simplest, a card and a POS transaction. So you go to one of the retail stores, you purchase goods worth 1,000 rupees, you give him a card. Okay, that person who is the cashier is going to insert your card into the POS machine, ask you to put a pin, or if it's NFC enabled, just going to tap the card on the NFC icon, and then your transaction will carry out. But at the back end, how the transaction works is the POS machine is actually supplied to that retailer by a acquiring company. So somebody like a Pine Labs, Mosambik, EasyTap, so on and so forth. And those acquiring companies actually have partner banks, okay, through which the switching happens, so which is the POS switching. Now the retailer may have very good arrangement with their bank, and the bank may also have supplied the POS again through that acquiring partner. So the transaction goes from that banking POS switch onto NPCI. From NPCI, it will go to the issuing bank. Okay, so issuing bank is your bank who has issued you the card. It goes onto the debit card switch. From there, it goes on to the CBS. From there, your account actually gets debited for 1,000 rupees. Then the response comes back again to that switch. From there, it comes to NPCI, it comes to the acquiring bank, and then to the POS machine saying that transaction done. So you see this entire transaction leg that happens. Okay. At the end of the day, it's a digital ledger within the issuing bank, which is your bank, where it is saying that your account gets debited by 1,000 rupees. That's essentially what is happening at the end of the day. But this is how that entire transaction happens. Now, look in case of a digital rupee. Okay, and imagine this scenario. Just I want you to visualize this scenario. Okay, where I had this mobile phone, and you have this mobile phone. You walk into the merchant, you open your digital whatever app. Okay, it says that 1,000 digital rupee. Okay, you just tap your phone to the merchant's phone, and the 1,000 rupees gets transferred onto this phone, and this entire backend rigmarole is saved. I'm just giving you an example of possibilities of digital. Okay, now your transaction, the card and pin transaction is possible when there is internet. Where there is no internet, it is not possible. Then there is offline limits in terms of NFC transactions, and then next time your card goes online, the chip, all those things are there. So it is there. I'm not saying it's not there. But in the case of a digital rupee, all these dependencies may go out. Too early to talk about digital rupee right now, but just trying to bring some context to the discussion, saying that because all the transactions are going digital, all the inherent requirements starting from a consumer to a corporate are becoming digital, then why do we have to still rely on the physical form of rupee when it comes to transacting? And that is where the inherent need for the digital rupee. I hope I have answered your question in whatever limited knowledge I have on digital rupee.
Yes, sir. Totally understood. Ravi sir, we have a question from the audience. What are the risks associated with unsecured lending, and how are you mitigating it?
No, so obviously any unsecured transaction, the obvious thing is that you do not have a security. However, there are ways and means, as Weber also pointed out earlier, that through AI, ML, and data, actually data, data is the underlying requirement. So through data, you can secure. So if the transaction, obviously, I'm not going into the details how we go into mitigating, but definitely the underlying strength of the receivable. So from a factoring point of view, what we rely on is the underlying strength of the receivable. What I mean exactly is that whether the seller is selling, whom the seller is selling, how strong is the payment, track record on all those bases, whether the buyer's credibility, who is actually buying and whose receivable is created, has the credentials to pay at the end of the tenure, is something which we assess, and on basis that we are able to finance on an unsecured basis. Obviously, the lesser the probability, I mean, the higher the probability of the buyer's credentials not being strong enough, then definitely goes out of question. But that's what is the role of fintechs is coming into the play at this point of time, that these build a history over a period of time, that the similar transactions, a seller A selling to the B over a period of time creates transaction history, right? What time, how long it has taken to pay against the credit period which has been approved, whether there has been delays or early payments or on time payments. That is all the history which provides the lenders a comfort that taking a strength and relying on the underlying receivables. So this is how the data comes into the effect, and that's where a lot of fintech companies are providing that sort of a data. We are seeing a usage of a lot of GST and data also through there are fintechs who are providing a securing mechanisms where the transaction gets actually authenticated from the GST and network also, whether the buy and the sell transaction or the shipment of the goods or supply of the goods have actually happened. So these are the tools which are coming into the play, and these are new age tools using blockchains, whatever DLTs, and to secure that sort of a transaction. In fact, GST in India context specifically, before GST, the availability of these sort of data was unreliable, and now with the GST coming in itself, has provided a lot many data. And likewise, there are other data points also. That is the credit bureau checks, the KYC checks, the various other touch points which customer uses. All those touch points actually gets verified from one particular fintechs or multiple fintech solution providers, which ends us providing the mitigating factors to it, and how the ultimate financiers are able to take a decision to provide an unsecured finance. I hope in a limited manner, although beyond which I cannot go, obviously, the financiers are able to secure their risk.
Thank you, Ravi. Now, sir, we have another question from the audience. It's directed to you, Vaibhav, sir. The question is by Mr. Vinod Chaube. He asks that, has the digital transactions passed through the tests of money laundering checks, and has any study been done to ascertain the digital transactions, especially funds transfers, digital loans, mutual fund transactions, bullion buying, with cash transactions shrinking, unscrupulous elements find new ways to deceive and launder money?
Excellent question, Vinod. And yes, there are various checks and points which the regulator itself has put in. So there are anti-money laundering checks which are there. Okay, and there are various parameters. So what we are supposed to do, and not just fintech. I'm talking about the BFSI industry as a whole. RBI has given this set of regulations in terms of transaction limits, and those transaction limits define that anything that does not fall within the transaction limit is actually something that has to be flagged off, and when it gets flagged off, it needs to be checked and reported to the regulator. Now, it is not just that it gets reported to the regulator, but real time monitoring of transaction also has to take place. So there are exhaustive risk management, compliance management platforms which are there, which banks have implemented, NBFCs have implemented, and those platforms actually scrutinize each and every transaction before it goes in. But before I reach to a transaction, let me tell you that even when it comes to onboarding a particular customer onto the platform, whether it's a consumer or whether it's a merchant, what kind of checks we need to do in. So there is, for a consumer, there is something known as Aadhaar verification that we do. There is PAN verification that we do. The most of the times we check whether he has a email or not, a functioning mobile number with an OTP. A lot of our fintechs also do social media scrub to understand if he has a Insta, if he has a Facebook, if he has a LinkedIn, Twitter, and how long he has had that. What sort of, for merchants, what sort of locality is that person having the shop in? Is it owned? How old is the electricity bill, since how long he has been paying it? Then again, deep into his bank reports. And then from a transaction monitoring perspective, we know that it's a real-time transaction monitoring mechanism in terms of, any non-KYC user trying to send money into a KYC bank account. I think the limit is 10,000 single transaction, 10,000 cumulative. You cannot do more than that. And all those checks and balances are already in place. Okay, so there are various guidelines for the type of products that are getting used. There were cases earlier when digital account opening was new, when a lot of people used to use this digitally opened account as a pass-through account for movement of funds, and the money would actually originate, the fraud would be carried out. So a phishing fraud would get carried out from a certain website, and the money would pass through 4 or 5 of this digitally opened account and then get into a lending account. From there it would be withdrawn within a matter of few minutes. But then what we as banks understood, and I keep on referring to we as banks because I've been a banker most of my career. So what we did was, we put in limit balances, that a new user whose account is opened is not KYC, he cannot transact more than 5,000 rupees in that particular day. So there itself you restrict that particular thing. Okay, and it's a half KYC account. So those regulations and everything are in place. Vinod.
Thank you for answering, Vaibhav. I hope, Vinod, that was a satisfactory answer for you. And next, we also have a question from Mr. Shankar Muthuswamy. So he asked that how will insurance companies benefit more from trade credit insurance perspective? Ravi, will you like to take that up?
Yeah, definitely. So, definitely, insurance is something new play which has come in Indian market after an embargo of possibly around about 12 years. This is a new benefit which has come in, and definitely, insurance companies definitely have a service to provide for the to the financiers to ultimately provide to the end customers, both exporters and suppliers. Otherwise, trade credit insurance services, which is securing their receivables against the risk of the buyer's delinquency, which is protect default or against the insolvency. So these are the two aspects which most of the credit insurance ends up covering. And definitely any factoring service across the world, if you see in the developed markets also, it has grown on the back of credit insurance. So with a strong backing of credit insurers covering that, not just from securing that overall risk, but also from being a key enabler. So we talked about a means of unsecured finance, right? So why the banks are averse on providing unsecured finance? Because obviously they're not relying on the borrower's credentials only, the financials, or even the underlying receivables. They want to secure their risk, right? What if in case of a worst come situation? So credit insurance comes at a play, which ends up providing as a service even to the suppliers, not just securing the risk for the banks also, but also covering the risk for the suppliers through the trade credit insurance. So the banks are able to secure that risk, and definitely they are able to provide that services, financial services, to the broader coverage areas. What we talk about definitely from an MSME and SMEs perspective also. So that's where the trade credit insurance comes into the play. it is a key enabler, and I believe that it can go a long while in providing and meeting India's financial inclusion perspectives, especially from an MSME's perspective, especially for the segment which is uncatered towards till today, where you are able to take a portfolio approach, secure the underlying receivables, and on that basis provide credit enabler to these customers. So yes, it is an encouraging story. It is a very propelling ideology which can help India take it to the next level, and definitely to the world third largest economy. I think this could be one path breaking reform which is already taking place. Obviously it is yet to see scale, but definitely around that new enablers also are required for banks, being from a capital benefits point of view and various other things, which is that definitely the regulators are taking into consideration at this point of time. But since this is a new story, I'm sure that there is a long way to go for this development.
Thank you, Ravi sir. Now we have another question from Mr. Somendra. He asks he would like to have some inputs on whether major lenders are encouraging collaboration and tie-up with fintechs with respect to trade-relevant financing.
Yeah, you want me to take it? You want Ravi to take it?
You both can present your views on it.
Sure. So I think most of the lenders are looking at fintech tie-ups now, because agility and nimble-footedness is the key when it comes to distribution, and fintechs brings stack to the table. So fintech also brings in the power of India Stack, and the power of ease of onboarding, the power of strong credit AI, the power of dynamic scorecards, and a lot of data points essentially, and then smart analytics on those data points that actually give those insights in terms of what sort of financing is relevant and what sort of financing is not relevant for that particular consumer. So yes, I think all of these lenders are looking at collaboration with fintechs.
Yeah, I echo my views also. I think today's era is of convergence. So I think it's all about partnering with various stakeholders, not just fintechs, banks, fintechs, and various other combinations. I think it's all about convergence and doing the business together. See, why the emergence of fintechs is there is because there was a problem statement, right? So that's the reason that fintechs have emerged, possibly which banks on a standalone basis for various reasons, for various constraints being there, not being able to address, be it capital, be it regulatory, be it whatever. I'm not saying fintechs bypass regulations. They are following all the regulations also. They are required to follow all the regulations. But they provide those key enablers, and definitely there is convergence which is going to be there. It's already happening, and many partnerships are being done across length and breadth of the banking and the fintech space, and it will keep on happening, possibly for the best outcome for the customers.
Thank you, Ravi sir. Now, due to positive time, we have to conclude this discussion here, and I would like to express a heartfelt gratitude to our eminent panelists, Mr. Vaibhav Joshi sir, and our CEO, Mr. Ravi Valecha sir. Thank you very much, sirs, for the valuable insights. I'm sure the audience found the discussion to be extremely knowledgeable and valuable. However,
thanks, Vaibhav. Thank you so much. Pleasure having you on a call.
Thanks, Ravi. Thanks, Jasdeep. Thank you, everyone.
However, if we were unable to answer a few more questions, you can reach out to us on LinkedIn, and we'll try to answer your queries. Last but not the least, a big thanks to India Factoring for providing this amazing platform for this discussion. India Factoring offers working capital solutions through the factoring product aimed at converting your receivables into cash, and is the market leader for export factoring. Must visit our website to have a deeper understanding of our products and to have your financial needs fulfilled. And also, do not forget to follow us on LinkedIn, Facebook, and Twitter. Thank you very much for joining us, everyone. Have a wonderful day ahead.